I welcome you all today to our event about investing in the EV ecosystem, which is the second out of our event series to showcase how innovation can accelerate the transition towards net zero carbon emissions. These events are brought to you by IDEALondon, EDF, UCL, Capital Enterprise and NovAzure, and shall lead up to the COP26 event, which the UK shall host in Glasgow later this year. Next slide, please. So a few words, one back. There you go, thank you. A few words to those who are sitting in one of our events for the first time. IDEALondon is an innovation center partnership between EDF, UCL and Capital Enterprise with a mission to empower tech startups grow faster, stronger and further than they could alone. EDF is the UK's largest generator of zero carbon electricity and a major supplier serving more than 3.5 million British homes and businesses, as well as public services like the NHS, Royal Mail and the government. Its mission is to help Britain achieve net zero. UCL is one of the world's leading universities renowned for innovation and its disruptive thinking since 1826. Capital Enterprise are the UK startup experts, connecting and energizing a world-class entrepreneurship ecosystem. As usual, we have the great pleasure of having Justine Clark being with us today, who's helping us to run the show. And last but not least, my name is Christopher Gruen, and I have the honor of being your host for today's exciting session. I'm one of the directors of NovAzure. We help startups, corporates and investors to unlock value driven by digital innovation in energy and mobility, favoring impactful green initiatives and ventures. Next slide, please. So today we shall explore the subject of investing in the EV ecosystem. But first of all, why is transport so relevant in the context of decarbonization? Although the UK's total greenhouse gas or GHG emissions have fallen more than 30% from 1990 to 2019, GHG emissions from road transport have stayed steady. Over a fifth of UK greenhouse gas emissions is basically coming from road transport. The UK's government announcement to fast track the ban of new petrol and diesel car sales from 2040 to 2035 is an exciting, but yet obviously daunting prospect for the automotive industry. So where are we now? Between August 2019 and August 2020, the number of pure EV registrations has been pretty erratic month to month. And here are some need to know points. Approximately 68,000 total battery electric vehicles, or in short, BEVs, are making up more than 6% of all car registrations in late summer last year. The highest number of BEV registrations in March 2020 were approximately 12,000. And the lowest number of BEV registrations were in April, due to COVID, obviously, with approximately 1,400. But overall, recent figures shows that a favor towards BEVs is definitely still growing. Very shortly on the plug-in hybrid EV side, we can see that in a time where overall automotive purchases are declining, consumers who are still making purchases are not shying away from pure EV technology and are favoring it more than middle ground PHEV models. The total number of plug-in hybrids has approximately 48,000 in the same measured period. What about the charging infrastructure side? And let's look at a global picture here, guys. There are 8.2 million charging points worldwide today, out of which 1.2 million are public and 290 million apparently are needed by 2040, which shows you the size of the gap. Next slide, please. So what are the biggest problems out there when we look at the electrification of transport? What are the headlines we can consider hot topics? Number one, The biggest problem that EV drivers had over the last years, and seemingly still is a problem, is range anxiety, meaning where can I charge my EV, which leads to the question, why aren't there enough charging points? As soon as you ask this question, there's usually a lot of finger pointing coming across, primarily between automotive OEMs and charging infrastructure providers. Kind of a classic chicken and egg problem. Boosting EV sales requires infrastructure, but charging infrastructure profitability depends on a critical mass of EVs being on the road to establish a business case and reasonable payback periods for making an investment in charging infrastructure. Luckily, as you shall see, we have representatives from both corners in our session today to comment on. What are some other hot topics? Interoperability is another big challenge in the market right now. However, solutions have been emerging to allow EV drivers to charge without all the fuss across different charging networks. Fleet electrification seems to be a significant business opportunity, in particular as COVID has forced a lot of old fleet assets to be written off before their time, waiting to be replaced by electric vehicles. It encompasses public transport, shared mobility, last mile delivery, and workplace charging. Emergence of micromobility and multi-mode applications is another important trend in the mobility as a service arena. So MaaS, in short, is a significant contributor of decongesting our cities and therefore reducing our GHG emissions. Due to COVID, micromobility has had a major push throughout the last months. The latest development is now going towards the connection of car sharing, micromobility, and public transportation concepts to focus on seamless and, of course, sustainable first and last mile journeys for the consumer or B2B customer. Now, looking further into the future, vehicle to grid, or what we call V2G, could well be one of the most attractive win-win solutions whereby vehicle owners, including car sharing companies and fleet operators, can create new revenue streams to sell energy back to the grid at peak times, which would be attractive for charge point operators as well as energy suppliers, or consumers, obviously, being car owners. In terms of technological breakthrough, wireless charging is also an exciting space, more for tomorrow. Inductive charging offers a seamless, futuristic experiences to EV drivers while being very efficient energy-wise, while stationary induction could soon enter a more advanced commercialization phase as well. So, just giving you a bit of a flavor of what some of the topics are. Next slide, please. And by that, I have hoped to tease you enough. So in this event, we shall dive into some of the details of this challenge, and we shall explore what are the emergent business models in the EV ecosystem, who is currently investing, what are they investing in, and what is the scale of these investments? What are energy suppliers doing? What impact will these activities obviously have to accelerate the transition to net zero? And what are the lessons that can be learned from leading countries? Next slide, please. So in regards to the agenda, we will kick off with an expert overview from William from Delta EE, followed by some tangible business showcases from Evotive, representing the automotive OEM angle. And then we have Horizon Energy Infrastructure being represented here as well. We shall then enter our virtual panel discussion where we shall have experts from the corporate, startup, investor, and policy side to share their insights with us, and where you can ask plenty of questions. And eventually we shall close the session then accordingly to give you an outlook of what awaits you in the upcoming months of our event series. Next slide, please. So, but before we move to our first presenter, let me gauge something with the audience, please. Coming to the first and biggest challenge around not having enough EV chargers around, could you, the audience, please get active in our poll and tell us your opinion of who can make a larger contribution to close the gap? Justine, would you be so kind to actually take the audience through the poll?
Sure. Okay, guys. Yeah, I'm seeing some of you vote here. So a lack of EV chargers, who can make a larger contribution to close the gap? Options: EV OEMs, charging infrastructure providers, both, or not relevant. I don't think range anxiety is a big issue anymore. We are coming in at, people are still voting, but it's looking like most people are saying both. 62% both, 25% charging infrastructure providers, 7% not relevant, 5% EV OEMs. Yeah, and it's coming in 63% at both.
Thank you very much, Justine, and thank you very much to all the participants. That was the first test. You're wide awake, you had your coffee, and you enjoyed a bit of polling here. So thank you very much, and we will obviously pick up on these points as well during our Q&A sessions. Yes, and thank you, Justine. I can see now the results on the screen as well. Thank you. Okay, guys, I've done my first monologue really here. So, but without further ado, let me introduce you therefore to William van der Bil from Delta EE, who will give us a much closer insight into how EV players are tackling opportunities in the market. And a last pointer to the audience, please feel free to post your questions during the respective presentations. We shall be picking those up either during the respective presentation, if there's some time, or if not, definitely during the panel discussion. Will, over to you.
Thank you very much, Chris, and good morning, everyone. And thank you to IDEALondon for having me today. The next slide provides an overview of the presentation. So the topic for today is investing in the EV ecosystem. And as the EV ecosystem is vast and growing at an incredible rate, it's impossible to comprehensively cover the topic in 10 minutes. But to try and do it as much justice as possible, I've broken down the expert overview into 3 sections. Firstly, focusing on emerging business models in the EV ecosystem. Secondly, an overview of investment in the EV ecosystem, and then what are the key lessons we have learned from this. And I'll briefly begin by just giving an overview of Delta EE on the next slide. And simply put, Delta EE helps companies navigate the energy transition, and we do this 2 ways. Firstly, by providing subscription research services, and secondly, by providing bespoke consultancy services covering a range of new energy topics, as you can see on the slide there. Next slide, please, Justine. And moving on to the innovative business models in the EV ecosystem. So the EV ecosystem, as I said earlier, is pretty large and covers many different sectors. But to give a flavor of the innovative business models which are emerging, I thought it would be best to cover 4 sectors: residential charging, public charging, EV as a service, and mobility, spending about 1 minute per business model. So starting off with residential charging on the next slide. And the example I have is Tibber from the Nordics. And there are 3 aspects to this business model. Firstly, Tibber provide a zero margin dynamic time of use tariff to consumers. I guess the UK equivalent would be the Octopus Agile tariff. And customers sign up via a €4 monthly subscription and receive access to the constantly fluctuating energy price that Tibber secures on the market. And through the Tibber app, customers can see exactly what the energy prices are throughout the day and the type or source of energy generation. Secondly, Tibber optimizes the customer's energy use to best match these varying energy prices. And this is done through Tibber selling smart home appliances and EV charge points that link with the Tibber app to allow them to automatically optimize the customer's energy use to ensure that the customer has the lowest energy bill possible. And third and finally, on top of automating the customer's energy use to ensure that the customer has that lowest cost energy bill, TIBA also provide frequency response services to the TSO, which provides another revenue stream for TIBA. Of course, by being active in the Nordics, EVs form a significant part of the household load, which is managed by TIBA. So it's a really good example of an innovative energy supplier optimizing customers' EV charging and sharing that benefit with the customer through lower energy costs. Moving on to the next slide, which is discussing public charging. And this is the sector which I'd say probably has the least amount of innovation and business models across the value chain. It's no secret that hardly anyone, if anyone at all, is making a profit from public charging today. And it could be said that innovation in the sector is more in managing that financial risk. And one way of managing that financial risk as best as possible is by stacking different revenue streams. And a good example of this is GridServe's electric forecourt. The electric forecourt in Braintree, which is pretty new, is able to stack 4 different revenue streams: energy generation, grid services, public charging, and retail. And on a side note, 2 additional innovations which are occurring in the sector are the move towards high power charging, so 100 kilowatt plus, and the integration of EV charging into other services. And these 2 trends are also illustrated nicely by GridServe's electric forecourt. On the next slide, we going on to the next innovative business model, which is EV as a service. And the example is NovAzure and the activity with heavy duty fleets in North America. So NovAzure, which is the EV charging company, a software company, IPO'd in 2020 through Newborn Acquisition Corp, which is a special purpose acquisition company, or SPAC for short. And I'm sure, as you all know, SPACs seem to be all the rage these days. But NovAzure has a partnership with bus and electric truck specialist Line. And this has helped them target the electric school bus sector in North America, where they offer a one-stop shop via monthly subscription. So they offer their customer the vehicle, plus the charge points, plus the power. And this removes all the risk and complexity for their clients. And their business model aims to reduce the costs as much as possible for the fleet operators by providing both fleet operation services, but also vehicle grid integration services. So for example, peak shaving or tariff optimization or ancillary services. And the majority of their revenue is generated from the activity on the flexibility markets. And this obviously helps reduce the monthly cost that these fleet operators are paying to NovAzure. And then the final business model is on mobility. And here the example I've chosen is Onto, which provides private and business buyers an easy way to drive an electric vehicle via an all-in-one just pay and go proposition. So the customers offered a fully electric car, complete with insurance, charging, breakdown cover, service and maintenance, all for a simply monthly fee. And the vehicle access is controlled by an app rather than a physical key. And there's no long-term commitment at all required by the customer. They can hand the vehicle back at any time. So that hopefully provides a flavor of the types of business models emerging in the e-mobility space. On the next slide, I'll just provide, the next topic is an overview of investment in the EV sector. So on the next slide, we can see that investment in the EV charging sector can be divided into 5 stages. The first stage was in the first half of last decade, where we had the EV charging pioneers. This was a market led by startups, specialized clean tech and mobility funds, and investments from the OEMs and the utilities. The second stage was from 2016 to the first half of 2018, where we had what we call the fear of missing out stage. And here we had the first signs of accelerated EV adoption. However, it was still quite a fragmented market, and we saw utilities and oil and gas majors aggressively taking positions with acquisitions of companies. The third stage, from 2018 to around 2020, we saw the attractiveness of investments in the space really improving, and EV charging is becoming a strong ESG asset for the institutional funds. We still have the utilities and oil and gas majors continuing the expansion into the sector with acquisitions and investments. The fourth stage, we believe, will be out to around 2024, where we expect to have some sort of market consolidation within EV charging, which is driven by a winner-takes-all approach. We expect more institutional capital to flow into this market, and new business models will arrive as EVs hit scale. And the fifth and final stage, which we believe will occur in the second half of this decade, is where we expect the key market leaders to really become clear as EVs reach mass adoption. Next slide, please, Justine. On this slide, we detail how we have identified really 4 groups of investors in the EV charging space to date. Firstly, we've got growth investors such as Zoo Capital and Tendris, who have just identified return on investment opportunities. The second group are the vehicle OEMs such as VW or BMW, and these investments have enabled them to learn about the interfaces between the vehicles and the wider EV charging ecosystem. And they've typically taken a bit of a slower, lower risk watch and learn approach. The third group is the utilities, and they've obviously considered EV charging as a top line synergy play for them, which opens the potential to higher energy sales, as well as customer acquisition and retention. And the fourth and final group are the oil and gas majors, such as Shell or Total. And we believe this has largely been quite a defensive play from them, with their core business being impacted by the electrification of transport. And now we're starting to see the emergence of a fifth group of investors, which are the infrastructure and energy transition funds. They're starting to get involved as investments in the space become a bit less risky. And on the next slide, we detail where these investments in the EV charging sector have gone, and they've typically focused on 4 key roles in the value chain. The first is the hardware OEMs, such as Tritium, but compared to other parts of the value chain, they've got relatively low valuations in this space. The second area where investments have gone are back-end providers, such as last mile solutions or has to be. And it is still early days in the space, and we believe that this is a high growth area which will consolidate in the future. The third area is asset heavy CPOs. By asset heavy, we mean the CPO actually owns and operates the charging infrastructure. So for example, Ionity or Fastned. And the fourth area is asset light CPOs. And by asset light, we mean that you operate the charging infrastructure for someone else. So the asset isn't actually on your balance sheet. And as you can see in the graph on the bottom of the slide, the transactions involving the CPOs have dominated investments in the EV charging sector to date. But this might change as software becomes increasingly important. So what are the lessons that we have learned to date? And on the final slide of this presentation, we've identified 3 key learnings to date. Firstly, to be successful in the EV ecosystem, it helps if your customer proposition is as simple as possible. From Tibber offering energy on a subscription model, to Nuve offering their fleet customers an EV as a service proposition, which removes the complexity and risk for the customer, to Onto offering the customers a really simple monthly subscription mobility service. It really helps if you can hide the complexity that comes with the electrification of transport from the customer. Secondly, you can't read about EVs without reading what an issue they will have for the electricity grid. And as EV penetration increases, the flexibility from EVs is critical to ensuring that EV uptake occurs with as minimal possible impact or even a positive impact on the energy system. And this presents a great opportunity for players to improve their customer propositions by using the EV to provide this flexibility to the energy system and passing a proportion of those financial benefits onto the customer. And I really believe that we're only seeing the beginning of innovative business models using EV flexibility. Thirdly, there's been over £2.5 billion invested in the EV charging ecosystem with more than 100 transactions to date. But the winners are still to be defined. Is it going to be the utilities, the oil and gas majors, the vehicle OEMs, or a combination of all 3 of them? I think the next 3 to 5 years are likely to define the winners for the long term. So thank you very much for listening, and I hope that's provided a really brief introduction to investing in the EV ecosystem.
Fantastic, Will. Thank you very much. It's indeed very difficult to basically press a lot of interesting nuggets into 10 minutes. So I will already move on. I have tons of questions I would like to ask, but I will hold up until the panel session. excellent inputs from Delta EE. Also, just to mention NovAzure and Delta EE, we're actually collaborating as well on certain projects to assess actually innovative commercial models. And it's always a pleasure to hear Delta EE basically with sharing these insights. Now, major disruptors in the EV space, in particular Tesla, have impressed us all with not only an electric but fully connected car. Traditional automotive OEMs have woken up, now reacting here in Europe, while meanwhile in China, OEMs have already matured significantly to bring their connected EVs to the market. Now, how often does it happen that we can be a witness to an announcement of a new OEM hitting the European market? It is with therefore great pleasure to present you to a company that is still so stealth that you won't even find a reference to them yet in the public domain. To the audience, please don't shy away to send in your questions over the chat functionality already. Depending on the time, I will be able to pick up 1 or 2 questions right after the presentation or latest during the panel discussion. But now, without further ado, Theo, over to you. Please go off mute, please, and tell us about how a Greek in Scandinavia will be setting a new benchmark across the EV and shared space in Europe. Over to you.
Thank you very much. Good morning, everyone, and thank you for this opportunity. We are, as Chris says, we are Stealth Mode. This is our first, let's say, open presentation. I am actually at our lab where we're testing new batteries and so on. So that's why we don't have a fancy background at the end. Next time I will be from the office. My name is Theodos Anakis, and my background is from Volvo. I spent a lot of my, let's say, good years in Volvo and in Geely, and I will be presenting a new brand that we are launching in Scandinavia at the end of the year, with production facilities in China and in Europe. So, and I would like to say that this is a favor to our supporters, NovAzure. So please keep the information as secret as possible. Thank you. I will start by presenting a little bit our team. Can you go to the next slide, please? So we are a collaboration of companies, to be more correct. So in order for us to really introduce a new brand, we needed to have access not only to strong team, but also to strong partners. So among our shareholders, there's a major Chinese OEM who is providing us with a manufacturing line in China. We have several vehicles that are actually tested now on the roads, and both in Sweden and in China. So, so what I'm very proud of is that we have put together a very strong team and partners together. Our team, I would just mention, let's say, a couple of key people. We have Thomas Waltz. Thomas was the head of both development and production for Delphi in Scandinavia. And where to make this more tangible is all the autonomous functionality that you will see in a modern Volvo car, even for the next coming 2 years. Thomas was responsible for execution, for supply base, but also to develop the whole system, but also active safety and electric propulsion systems. Roger Johansson, it's a quite well-known figure in Sweden. He's behind a lot of very successful cars, and his contribution, for example, was second to none to the Polestar EVs hitting the market the last 2 years. From a partner perspective, we have very good support from the Geely Group in all aspects, but we had also the opportunity to create very interesting cooperations with other companies that has been supporting us the last 4 years. So next slide, please. If you go, I would like to focus a little bit on and following up from William in his presentation. I think a few of the keys for us to find success and to get to this difficult market was, the first one is, as you know, Scandinavian it's a quite a small market, but has been successfully becoming actually the leading market in EVs and autonomous drive in Europe, which is quite remarkable. And one of the key aspects of it is that here in Scandinavia, we are creating a lot of micro hubs. And that has been a success story behind Volvo, Polestar, and other brands. but also for our own brand. So we are working together with a lot of existing companies or starting up companies in the area, especially in Oslo and Gothenburg, who have a very strong, let's say, foundation in the automotive industry. So by creating these micro hubs, we allow ourselves to develop faster, but also to not only moving faster, but we also have the capability to utilize new ideas faster. So instead of having, let's say, one big investment or one big company, a group of companies can be very successful. And this is what we do at the moment, for example, with our partners CDQ, NovAzure, and other companies in the region of Gothenburg, Oslo, and so on. Next slide, please. Going back to the opportunity, I think it's very important to go back to the actual data, because sometimes when you work with something, you actually don't realize where we really are. And I think it's very important to realize that what you see in the presentation is actually the actually sold units in Europe, and specifically the situation in Europe as of last year. So if you see this little arrow on the left, this is actually EVs sold comparing to plug-in hybrids and regular ICEs. So what you will see as a first point is that we are only in the start of the EV era. I think we all agree that regardless if it's going to be 90% or 100% of the vehicles in the next 10 years being EVs, a big portion of it will be electric. And when you realize that right now, in average, we have less than 2% impact in the market, and it was enough to create huge companies like Northvolt, Tesla, Lucid Motors, and all of those investments, then you realize what will happen when we just reach an average of 10% of electric vehicles on the roads. So what you will see in the left, again, is the actual sales. You see the dip caused by the COVID. And on the right, you see, I think it's an amazing graph that was done by a Swedish company. And what it presents is basically all the red areas, Italy, Spain, all of those areas, they have less than 1% EVs. And if you see in Scandinavia, where you see, for example, Norway is the strongest, that's the only areas where you really have a bigger impact of EVs. So again, I think the interesting question for us working in this sector is that this is going to be huge. This is going to be a great opportunity for everyone. And I think going back to Peter Carlson, the founder of Northvolt, his message was very clear that we don't do enough. So we are not in an area. I just want to finalize this image by making clear to everyone around the table that we are not in a market where you have to really challenge everything to get into the market. Right now, we have shortage in batteries, we have shortage in EVs, we have shortage of chargers. So once you create a good business opportunity and a good product, there's a huge opportunity going forward. Next slide, please. From our perspective, what we try to do is we try to utilize the opportunities we have in the innovation in a single package. So what we have, the biggest opportunity that we have as a new OEM is that a traditional OEM, like let's say like General Motors, Ford, BMW, they are blocked by 2-3 items in order to act fast. The first one is, of course, is the heavy investments. The second one is an existing product portfolio that, of course, needs to pay back all the investments. So what we try to do is we try to start by a white piece of paper together with a strong backing of suppliers, and now create vehicles that are, as a starting point, fully electric and connected, as I will show you later on, not only as an independent vehicle, but as a fleet. We are all electric, all our vehicles are full electric. And the target for us is to introduce a full autonomous solution in the next few years that allows that shared mobility really to take the next step. Next slide, please. If I give you a little more of details of how we want to do this. So basically, the first vehicles you see, the first 3 vehicles actually, one Classic, one Business, and one Pro, those are project names. Those cars are right now going through the last test on the roads of Sweden, which is probably the worst environment to test a vehicle with a cold and this horrible weather we have to survive here with. So we're going to launch this. The idea of those vehicles is we do something new, we think, here for our area. So it's a low-cost vehicle that will allow us to split the vehicle throughout the markets It's a very low, let's say, investment for shared mobility. But at the same time, we're equipping the cars with equipment like a simple LiDAR, a more simple version, and basically do similar what has given the edge to Tesla. So all the vehicles we're launching in the market, although they are they're very low cost, they have the equipment in them to allow us to learn, collect data for autonomous drive. And by actually not enable them to drive let's say autonomously, we are allowed to collect data without restrictions. So our first step of our strategy is to bring vehicles to the market that are needed today. There is a huge need for low, let's say, cost, fast charging and long range EVs. And collect data, get prepared, and then starting already 2023 at the low speeds applications, we want to be one of the leaders of autonomous drive. And because we believe that if we are early in the market and we have a good product overall, it will allow us to create revenue, but also strongly, the strong focus allows us to be competitive in the future. Let me see. Okay, let me go to the next slide. So I will hurry up. So what we're proposing is that we believe that in order to really get the e-mobility up and running, there's a few things that we want to go live with. The first one is that all of our vehicles are fully connected to each other, and as a fleet, we have invested in a higher performance battery, so our small vehicles actually have quite a huge range. And then we have easy maintenance as an opportunity for the users. Next slide, please. So this is what we're doing. We are creating a fleet on the left that will allow the operators to have full access to the fleet, from the data to the hardware to all the systems around it. So the idea is that we create a vehicle that has common telematics throughout the products. We have one battery system for all the applications. So we're creating a fleet rather than individual vehicle. So those vehicles can communicate, you can utilize them for different reasons, and so on and so on, and can work on a chain together with a fleet operator. Next slide, please. We're working very hard to connect our vehicle to the grid. So one of the first things we do is we actually have one of the first high-performing and bi-directional onboard chargers. So on our vehicle, we are able to connect it to the grid, which of course, if you consider that each vehicle has about 50 to 100 kilowatt hours of capacity, it's a huge capacity to have parked in every house. So we are working right now to have that bi-directional onboard chargers that allows us both to connect to the network and provide support to the grid, but also, for example, to connect tools, to connect other equipment that you may need when you're out driving into the vehicle and get the energy out of it. Next slide, please. So again, thank you very much for the opportunity. I hope you got a little bit of a taste for what we try to do. And I hope to see you all when we launch our brand publicly in a few months from now. Thank you very much.
And thank you, Theo. We will be moving on. So we will actually have some questions. I mean, again, tons of questions that I have on my side, but we will park them for the panel session. We shall be watching you closely. And folks, most importantly, you have seen Evoltive first time with us during our Net Zero event. So how exciting is that? Next slide, please. As mentioned before, you can't have electric mobility without investing in energy infrastructure. And we heard it from Will already. There's a lot of money basically going towards infrastructure. So it would be great now if we could hear an expert overview on how the business side looks like when it comes to EV charging in particular. I would therefore like to welcome Daniel Riley, Business Developer Director of Horizon Energy Infrastructure. And to the audience, please keep sending in your questions. Daniel, over to you.
Thanks, Christopher. And don't worry, Theo, your secret is safe with me. I won't share, but different to Theo, please feel free to share our name out into the marketplace as much as you'd like to. We're not a secret. As Christopher said, my name is Daniel Riley. I'm the Business Development Director here at Horizon Energy Infrastructure, and it's an absolute pleasure to meet you all in the normal sort of virtual Zoom weird sort of world that we live in. Today, I've prepared and put my sticker on my front door asking the Amazon driver not to make too much noise when they're dropping off the multiple packages that arrive over the course of the day. And luckily the kids are back at school now, so we shouldn't get too many interruptions, and the bandwidth should be a bit safer than it was over the previous month. Talking about my kids, I guess I was taking Alice, who's my 11-year-old daughter, to school this morning, and that's one of the upsides of COVID, I guess, is that I get to spend a bit more time at home and I can walk her to school. And the first bit of exciting news was that her whirlwind romance with Joseph of 2 days has come to an end, and that's not moving forward anymore. And the other bit was she asked me what I was doing with my day. I said I was coming onto this event today and speaking around what we do at Horizon. And she said, "Well, what do you do, Daddy?" I went into the corporate spiel of we provide funding and finance to support the uptake and installation of assets within the UK energy ecosystem, smart meters, heat pumps, batteries and solar, and for today, EV infrastructure. And she just went, "What?" So I tried to think about how do I put it into more simple language. And I think I came up with, basically, there's some really expensive stuff that people want out there that can help save our planet. What we do as a business is we buy that stuff for people that's really expensive and allow them to put that in place, which can make significant change to our society. And they just pay us back a little bit of money every month, which really helps the proliferation and the uptake of those. And that's what we do at Horizon. We really do support the UK energy ecosystem in putting these important positions in place. And I'll talk a bit around the EV charging infrastructure in a minute. I guess, and why do we do it? There are two key targets that we look at, which is the end customer and what's their needs and drivers, and our partners, the resellers of our funding solutions, in terms of how they take it to market. And it's pretty obvious why people want these things, but it's important just to get those on the table. Firstly, from an end customer's perspective, we remove the need for significant capital outlay at the get-go and remove the liability from the balance sheet, which is really important. Pull together multiple contracts into a really simple-ish contract mechanism and turn that into a monthly payment, which is really easy to budget for and to put into your planning. And then from a partner's perspective, whether that's the manufacturers or the charge point operators that I'll talk about shortly, we provide innovative funding solutions that really address their needs and their customers' needs. And that helps them grab market share in the short term. Conversion of pipeline is important from that perspective as well, and ultimate volume uptake. And that's sort of the value that we can bring to both of those key segments. If you could please move on to the next slide, Justine. Thank you very much. And just a bit more around Horizon Energy Infrastructure and what we do and what we've done. So we've been working in this space now for over 10 years, partnering with some of the UK's leading energy suppliers, whether that's EDF, SSE, British Gas, but also working with some of the emerging disruptors, whether that's Octopus, Pure Planet, So Energy, and other of our key customers. And what we've supported with is the smart meter rollout. So by the end of that rollout, we'll have between 2 to 3 million smart meters on the walls of UK homes and businesses. And why is that relevant to EV charging infrastructure? Well, it's relevant because the model that we've built up in the smart meter piece translates directly across to EV charging infrastructure and other assets within the ecosystem. We take the cost of the asset, in this case, the EV charging piece, the cost of installation and other pieces of that cost stack, whether it's grid connections, which we'll come on to shortly, and put that into a simple funded solution. And that's what we've done. And that's really important in terms of the experience that we have. In terms of access to capital, it's not particularly easy to come up with funding models, and it's not particularly easy to build up strong relationships within the marketplace, but access to capital is equally important. Through our ownership structure with Arcus Infrastructure, we have access to capital through them and also through our banking syndicates. So we have significant funds available to deploy into this space. And ultimately, it's not about a cookie cutter approach. We don't take the approach we've had with smart metering and force that through other asset classes, and particularly the EV charging piece. We work with partners to come up with bespoke funding models that really work for them and, more importantly, address the needs of their customers. Next slide, please, Justine. Thank you. So just to talk a bit around our work that we've done within the EV marketplace. Firstly, I've talked about the various asset classes that we've explored. We as an organization are very much focused on the EV infrastructure, and it forms part of our strategic objectives for the next 5 years. So we're all in, I guess, when it comes from an EV charging perspective. And we've spent the last 2 years really analyzing the marketplace to identify the areas we want to support and where we feel, I suppose, our capabilities are best deployed. And the first, I suppose, exercise we did with that was trying to segment the marketplace down to see where, and that's very much looking at B2B and residential. And we saw very much the need for funded solutions emerging within the B2B sector. We believe that B2C and residential will come through in the coming years, but I think a lot of the learnings will come from B2B and will trickle through over time. So our focus is B2B, and then within those sectors, street side charging, destination charging, and workplace charging, which all have bespoke needs for a funded solution. We then actually look at those funding models and revenue models and explore what are the needs of the organizations out there. And there's a broad range you can go through, which we don't have the time to go into today, but from a straight lease, which is the bundled cost stack, which I spoke about before, which is the cost of the EV charger, the installation, and potentially the grid connection, which is obviously potentially a significant cost, much higher than the actual cost of the infrastructure, through to concession models. And what concession models mean is basically the revenue you generate off your charge point will finance the capital that you've had from the purchase perspective. And that's where we're playing at the moment. B2B, key areas of segmentation in terms of which charging infrastructure we can support and the various funding models that sit behind that. We then have that offering that we can take to market, and we are then working with our key partners and resellers to take those propositions and to support them with the uptake. So we work with our energy suppliers that I referenced on the previous slide, the key relationships that we formed over the last 10 years, supporting them with the funded solution, but also bringing in key partners to take an EV solution to market. We work with some of the leading charge point operators within the UK who have their bundled solution of assets, i.e. EV charging infrastructure, software and installation services, and supporting those organizations taking those through to market. And also with specialist key installation partners who are more agnostic in terms of the offering and supporting them. And in some instances, we do deal with larger key customers who have significant portfolios that they're trying to deploy, and helping them with our expertise from a funding perspective, but also with our view of the marketplace that we've built up over the last 2 years. Last slide, please, Justine. Yeah, then, and just moving on, and I guess we've learned a lot with all these sort of things. You sometimes make more mistakes than you get right, and I suppose some of the learnings that we've got from that is, whilst we've looked at the B2B side and businesses looking at their EV charging uptake, the important thing that people need to focus on is also around the grid connectivity. And that's what can really slow down installation. We've worked with many companies, and we are, in terms of supporting them, putting their EV charging solutions and strategies in place. And we've learned you've got to have the grid conversations, the connections as quickly as possible, informing your EV infrastructure for your organization. That's really important. I think as people are understanding the cost impacts from an EV charging perspective, leasing models are emerging, and the desire and demand for those are coming through. And that's really been in the last 12 months. 12 months ago, it was very much seen as a capital outlay, but as the market's evolved and matured, that's certainly coming through. And again, I think in the past, there was a desire for concession models, so the revenue generated from your charge point, financing that charge point. But again, as I think those models have evolved, people understand until utilization rates, i.e. the usage of those charge points, and there's more clarity on pricing come through, then there's a hybrid model from a leasing perspective as well. And finally, I guess that the market still feels like it's very young, it's emerging, and we're very happy to share the knowledge that we've built up over time and the experience with anybody out there. So if you are interested and would like to have a chat, please get in touch. So that's me. Back to you. Thank you.
Thank you very much, Daniel. And I mean, NovAzure is working together with you guys as well. So recommending really, if you want to ask a number of questions, really towards Daniel, please do reach out to him. We will take any questions around this in a bit because we are running a bit behind time. So we will therefore move directly into our panel discussion. Can you switch over to the next slide, please? Thank you very much. So in addition to Will, Theo, and Daniel, I would also like to welcome a few other panelists who represent the corporate and in particular the investor side of things. Now, if I can just name the additional people coming on, and if you can just give a very brief introduction about yourself and explain to the audience what position and role you have. Phil, can we start with you if you can come off mute?
Sure. Yeah, morning everyone, and thanks, Chris. So I'm Phil Ballerino. I'm interim head of EV projects at EDF, and really my brief is to, in the UK, be the development or the doer and the deliverer of the EDF Group e-mobility strategy. So the e-mobility plan that EDF launched 2 years ago, which has 3 strands to it. In effect, it's been a leading power supplier, so being a leading provider of the fuel for EVs, and then have the largest charging network across our group countries, which we mainly focus in Italy, Belgium, France, and UK. And then the 3rd strand of that is to be a European leader in smart charging. And the focus here is on stepping up on the development of a smart charging and related services. But as with much in EVs, it's early market. Main focus for now is helping customers achieve net zero, and that's really in the EV space to transport, giving customers access to cars, chargers, and tariffs. But I'm sure there'll be more of an opportunity to explain about that shortly. But morning all.
Thank you very much, Phil. Let's continue with our investor corner. Emily, could you give us a short intro on your side?
Sure, I'll try to be brief, but hi, my name is Emily Hanazo. I'm an associate at InMotion Ventures. We're Jaguar Land Rover's corporate venture capital fund. We've been investing for the last 4.5 years into companies that are changing the way that we move, and we typically look at transportation and mobility quite holistically. So looking at electrification, autonomous vehicles, connectivity, and very much focus on people rather than the transportation of goods. And my role there is pretty much research, deal flow, and portfolio management. So I'm very excited to be here today. Thank you.
Thank you. And as promised, we always like to keep things international, and we wouldn't like to miss out to get some insights coming straight from Germany. Herr Schanze, could you please give us a quick intro?
Thank you, Mr. Gruen. Thank you for the opportunity here. Yeah, so I'm one of the GPs of Rethink Mobility. We are a new early stage venture capital fund that invests in the best mobility startups in Europe. And we connect those mobility startups that seek more than funding with corporates that are our investors, that seek more than just a financial return from a fund, but they want to connect to new technologies all around sustainable mobility.
Vielen Dank. And eventually we would also like to hear the vantage point of an accelerator and from a governmental angle, which can both be covered by Exeter Velocities. Mandy, would you be able to give us a short intro, please?
Hi everyone, I'm Mandy Nyarko. I am the Managing Director of Exeter Velocities. We are the innovation arm that supports Exeter City Council to drive towards their net zero goal by 2030.
Brilliant. Thank you very much. I would hereby like to open up the panel discussion, and let me kick off the session with a few burning questions first towards the newcomers, while the audience is obviously invited to pull in more and more of their questions. So if we can focus on the investor side, Emily and Matthias, from what is being discussed, what topics do you find most investable today? Let's hear it from Emily first.
Sure, and I think a lot was mentioned today, a lot of interesting topics. But I guess for us, we're a venture capital fund, so we're looking for companies that can scale really quickly. And I think the sector has suffered from companies arriving a bit too early in the market, and it hasn't attracted a lot of venture capital investment. But and I think at that point, VCs were just considering that enterprise SaaS was just securing better returns than investments into electrification companies. But as Theodore and others have mentioned today, I think there's really an inflection point in the market, and the demand and regulations are there. So we're seeing a lot of activity in the sector. Looking at battery tech, and I think there are a lot of companies that are making the battery chemistry more efficient or increasing the battery range, et cetera. That's a super clustered space for us with a lot of competition. And manufacturing is really difficult with incumbents having huge capabilities. So I think for startups, this space is really hard to operate in, but we're seeing several companies doing things that are quite niche in the battery space. So looking, for instance, at second life batteries, which is a huge strategic areas for us. So, we'll have these huge batteries inside vehicles. What are we going to do with them? Because even if they're not going to be considered eligible to drive anymore, they still have a lot of capacity and can be used in the home. So that's a big strategic area for us. How do you recycle the battery best? So our latest investment was into a company that does really clever recycling of materials inside the battery into new, cheaper material that can be used again. How do you diagnose the battery? So how can you improve the lifespan? How do you just increase the chemistry in the battery, et cetera? And I think there are some super interesting companies in this space like Twice or Qnovo that we still have questions over the unit economics and how much a battery entering the second life market will be, but I think it'll be a really important space moving forward. So that's the battery tech side. And then we have a second pillar for us, which is improving the experience of owning an electric vehicle. And that's topics that I think were covered today, but looking at smart charging, I think the industry has really focused on public charging and public infrastructure, despite charging happening a lot in the home. So companies like EV Energy, for instance, help drivers charge in the home at times that work best for the grid. And that's really important as we have more drivers that come in, try to charge their vehicle at 6 p.m., which, the grid capacity is just not there. So there needs to be a solution. I think smart charging is given, and we know that that's going to happen, but I think V2G is still up for grabs, depending on how regulation develops. And the cost of a V2G charger is still 10x the cost of a normal charger. So I think we're kind of waiting to see what happens in that space. And then lastly, and then I'm done talking, but it's the EV navigation routing, which is how do we best help EV drivers navigating. And for those that have an electric vehicle, I think that's probably a problem that a lot of you are having, which is, you drive to the charging station and it's under maintenance or it's busy because the data is just not there. There's not good connectivity of the chargers. So how do you help complete that gap of incomplete or outdated information? And I think that can really be helpful to the driver if there's a really good app to help doing that. And ways of starting doing that a little bit, but I think there's still space for startups to do interesting things in that space.
Wow, a lot of
sorry, a lot of content. This was too dense.
No. It's great. It's just giving me tons of other questions that I can bounce off the other members of the panel. So hold your horses. But before we move on and just go down a few rabbit holes here, Matthias, what do you think are the topics which are considered hot today? In particular, let's say, what's being discussed in Germany next to COVID?
Yeah, perhaps, next to COVID, I don't know if there's much space for other topics. No, on the contrary. So one factor you should not leave out in the discussion is the power of regulation. So whenever you see governments across Europe pushing into new regulation, then of course new markets emerge. So I mean, if you look at the pioneering countries in Europe in terms of penetration of electrified vehicles, then it's all mainly down to the push of governments. We've heard about it in the Nordics and in Norway in particular. So there's a strong push from regulation, and that also means new markets may emerge from specific regulation. If the regulator requires, let's say, a parking lot operator to have a certain share of parking spaces with charging points, then that's a new market for companies that address that specific demand. But apart from regulation, you were asking for hot topics. Definitely, I would like to touch on one point that Emily had already addressed, and that is the customer experience around charging. You reserve, you charge, and then you pay, and that still is a hassle, still an unsolved issue, and I think there's still a lot of space for successful startups to emerge in that field on the one hand, and there's a urgent need for all sorts of established players in the market to offer their customers really holistic solutions that work. It's still not solved. And it's not enough to build more charging points. They need to be accessible, reliable. So I think there's a good market there. That of course includes the topic of, you've mentioned it before, Chris, interoperability. So there's a big opportunity. Second topic I would like to highlight beyond the customer experience is definitely fleet operations. So you have the trend of moving mobility from private ownership more to fleets, and electrifying those fleets, operating those fleets, addressing the needs of fleet operators that don't want to build everything themselves, own everything themselves. So we've heard from the previous speakers addressing the needs of fleet operators, maybe from the financing side. So this is something that has a vast opportunity as the whole mobility ecosystem moves away from private ownership to fleet operations. Electrification of those fleets is a huge opportunity. And then one particular topic that I would like to highlight is we still have in our minds the car. So all trends around mobility point into a direction where you move away from one box that fits all your requirements, that fits your daily commute of 3 to 5 kilometers, as well as your annual leave towards southern Italy. So we move away from one vehicle that fits all all applications or use cases, to vehicles that are custom designed, custom built for specific use cases. And I think we've heard before as well from Evotive addressing that sort, and electrifying, having specific electrified vehicles for certain use cases. That is a vast opportunity as well. I would just highlight micromobility solutions, last mile logistics solutions. You've mentioned the City Queue before, but also something like vehicles that are for short range, for commercial operations, for fleet operations. So you have abundant specific use cases that will be addressed by specific designs of new vehicle types.
Thank you very much. Really insightful, and I couldn't agree more. I mean, it's all about basically having different platforms from a vehicle perspective being united and towards, let's say, one platform that the customer can then actually access. We will pick up on that again a bit in a minute, but I have a question to Phil, because I can see on my various screens that I have here that there's a lot of discussion around V2G happening. So I would just like to dive a bit further into that, and I'm trying to combine a couple of questions here from our good friends like Graham, Cooper, etc. I mean, is there a bit of a hype around V2G at the moment? Because if I look into alternatives around energy storage that could be more accessible, let's say, without necessarily the human element in there, is this the way to go? Or where's your view on V2G from an energy supplier point of view, Phil?
So, thanks very much, for the question. And V2G is definitely a thing, but I think V2G is now used as the the umbrella term for sending energy back to grid. I think the first step is smart charging, and rather than V2G, we're talking vehicle to home or vehicle to the office, because there are two sides to it, as as I'm sure many on the call will know. So this bi-directional charging is allowing for cost savings, but also revenue generation. And I think the first step is the cost savings one. That's the easy part. So not having to send energy back to grid. So firstly, you've got your office, and it's the first thing is to make a saving on the energy bill, and that takes away the complexities of having to send energy back to the grid. So your question of, is V2G a thing? Absolutely it is. Is it early market? Yes, it's very early market. I mean, you can see that just by the fact of all of the demonstrators and all of the, let's say, all of the funding trials that are live at the moment. What I would say is that with EDF, we're doing our part. So we've got a lot of R&D activity taking place in V2G. Indeed, we are also collaborating with Nuve. So we've created a joint venture with Nuve. So it's part of EDF Group. Is a company called Dreve, who powers our V2G activity. So they're the intelligence behind our V2G offering. And we have created what we believe is the first commercial, so that is non-grant funded V2G proposition. And that just about works when you stack the revenues, and in certain cases, it just about works as a commercial proposition without grant funding. So, Chris, to answer the question briefly, V2G is a thing. It's very early market. You believe in it or you don't. It's going to come in the future. I believe the market will explode. The first steps to that is smart charging, and I think the initial benefits that you can see from it is rather than sending back to grid energy, pushing energy back into grid, it's about taking stress off the grid and therefore generating savings. And you do that by sending energy from the vehicle battery into the building. That I believe is the first step. But of course, to stack revenues, etc., you want to also be providing grid services.
Thank you very much, Phil. And let me just swift very quickly over to Theo as well, because vehicle to grid obviously tries or requires, let's say, a number of obstacles to be removed as well. And I mean, if you think about, let's say, a young OEM basically coming in there and looking at people who have been in the market like Nissan Leaf or so, how does your V2G technology basically differentiate itself, say, from a Nissan Leaf, and how far advanced are you guys actually with it?
Well, the first one is the timing. So can you hear me, guys? Yes?
Yes, we can hear you.
So the first one is the timing. So what we have is that when you have, let's say, the Nissan Leaf, that was a car that was developed, let's say, 7 years ago, and they had a facelift about 3 years ago. So of course, that means that they had to use a technology that was done 3 years prior to that during the development time. So just by launching a car now, we get access to a little bit more modern technology. So our onboard charger per se is not developed only for us. We're going to use the same onboard charger that actually we're going to Volkswagen vehicles and so on. So the first point that I wanted to make sure is that we don't make a unique onboard charger, but we are one of the first adopters of this into the market. So we expect that 2024, I think, or 23, Volkswagen, for example, will launch the same onboard charger in the market. And here's where I think it's very important. When we look into infrastructure, for example, in chargers, a charger today will cost you the whole system, let's say for your house, everything from 2,000 euros up to 10,000 euros for a high advanced system. But of course, when you produce 10,000 of them, which is a small volume for a vehicle manufacturer, or 100,000, then you go to mass production. Then the same thing will cost you 600 euros. So another thing that I would like to add on the onboard charger that is bidirectional is that when you get the volumes that you get in automotive, the amount of vehicles on the same component, the cost goes down. So an introduction, let's say going forward, it will have a lot of be first in the market. I mean, from an investment perspective, that's what we want to achieve. And then try to be first in the market, but utilize technology that will be used by others as well. The sharing of technology, we think, is important to not stand alone on the risk, but at the same time, we'll get innovation first by being early adopters of this technology.
Okay, thank you. I will try to move on quicker because we obviously are kind of running out of time. So Mandy, we picked up an input from Matthias around regulators, obviously kind of driving on where, let's say, the hot topics may actually be. Now, you have had a few good touch points really with the UK government. So what do they think is hot and what is not? Where does the UK government basically place their bets?
Well, I definitely say they place their bets in supporting accelerating transportation towards zero emissions. And you can see that with quite a lot of the funding and initiatives they've put in place, such as Innovate UK. Innovate UK has been pioneers in really helping startups in their early stage get off the ground. A lot of businesses in this space need a lot of capital up front, and solutions like Innovate UK have been pivotal in them actually being able to do that and get to proof of concept and demonstrate some form of commerciability. And I think when you look at some of the other initiatives that they've rolled out this year or yet to roll out, such as the £30 million fund that will be going towards pioneering battery technology and electric vehicles and hydrogen vehicles, it really shows that they are doing the right things necessary to try and accelerate policy innovation in this space to drive the UK economy more and more towards a zero carbon way of transportation. They've also committed 22 million to continue work with the Faraday Institution to support the safety and reliability in sustainable batteries. And they've also committed another 12 million as well into supporting groundbreaking research into zero emission transportation, including EV charging. So there's a lot that they're doing in this space. They definitely hedge their bets in all different types of zero emission type of transportation, whether it be micromobility or just electric vehicles. So I definitely say that this is an area that for them is definitely hot, and they're doing their part to try and innovate in this space. So yeah, I'd say this is definitely hot for them. I wouldn't say there's anything that isn't.
Perfect. I think you mentioned actually something around micromobility, and I'm looking at a question that came from Wesley James, which is a question for you, Daniel. Are you looking at the funding solutions for micromobility EV charging infrastructure? I mean, obviously, the amount of batteries that an e-scooter is carrying around in comparison, let's say, to a car is obviously very different and very small. So is it a subject of discussion, Daniel?
I'm thinking before I speak, which is rare for me. I think it is. I guess it's in terms of core areas that we've explored. We very much looked at the areas I talked about during our presentation. I think as different needs and markets emerge, they're areas we're happy to explore. So I wouldn't say it's something that's on our list that we're proactively exploring. But as I think I said in the presentation, we're happy to engage in conversations to explore whether there's an opportunity to support that area. Yeah, so worth the conversation.
Perfect. And since I have you on the mic here, there's another question from David Powers. Do you work with local government bodies, public sectors? Mandy obviously is close, but from an infrastructure point of view of what you guys are looking at Horizon?
Yeah, very much so. And I think we look at it through various routes. So there are some key partners or resellers or charge point operators that we partner with who are very much focused on that sector, and we work with them to provide the funding solutions. And there are multiple organizations that are targeting that sector. And then specifically with larger requirements, we are working directly with local authorities to support them putting in place their EV charging strategies and ultimately the development of those. I think what we found in that sector, and I think it goes back to the concession model that I spoke about during my presentation, is there's a desire or a demand for funding to come through and the projected revenues of the charge point to finance that funding over time, which is a challenge for, as a financer, because the utilization rates and the stability on pricing for those concession models are not yet there in the UK marketplace. So I suppose there's a demand and a need from a local authority perspective, and actually what the market can support in the short to medium term in the UK. We are exploring sort of those concession models in more mature markets such as the Netherlands, and looking to take learnings from those into the UK market over the next 12 to 24 months once the patterns of utilization are more established.
Thank you very much for this. Let me just ask a couple of questions, actually more towards what the corporates are actually doing as well. Maybe back to you, Mandy, because I remember in our little chat that you mentioned a few interesting examples on how, let's say, the big corporates are basically supporting, let's say, the acceleration as well. Do you have one or two examples that you would like to highlight?
Yeah, absolutely. So in terms of corporate supporting early stage businesses getting these solutions off the ground, you have organizations like Shell who are doing a lot of different various initiatives, such as their Shell Livewire for very early stage proof of concept, early prototype founders between the ages of 16 to 30. It's an opportunity for you to pitch your solution and win a £25,000 prize, plus a lot of PR that comes with that. And a lot of businesses within the EV battery innovation space have actually really benefited from that. And it's helped them to actually shot-put themselves into the next stage of funding with Shell. One of the founders that we've supported has actually moved on to get grant investment from Shell Foundation as a result of being part of Shell Livewire. So, initiatives like that in that very, very early stage is very useful. Shell Ventures as well, a great initiative in terms of investment vehicle when it comes to scaling up already proven models or early stage proven models. The typical initial investment is like $2 to $5 million. BP Launchpad as well. So that's BP's innovation arm that takes on businesses again that have kind of moved beyond proof of concept product market fit. And that's another opportunity for founders to go in and get further funding to scale up their operations. Total are interested in this space. They recently acquired Bluepoint, who deploy charging points across London. Connected Places Catapult, which is more of a government initiative, but also connected with Wayra, which is Telefonica's innovation arm. They run various intelligent mobility programs as well to support early stage founders. And that's a great initiative when it comes to piloting with city councils or various corporates as well, because it gives the opportunity for the founder to have not only a bit of funding to develop their product, but also the opportunity to test the feasibility and the viability of the solution in a live environment, which again helps them to prove their business case when they're pitching to VCs. And yeah, I think definitely different initiatives like this have really supported founders in that early stage. Exeter Velocities, of course, we've supported founders like EV Energy, Emily, as well, to be able to come to the cities, get a bit of a grant fund, and also trial their solution in a live environment, which again helps them to understand the commerciality and the opportunity that their business may have, which helps them to go on to raise further funding. So corporates are definitely doing their bit in this space, even if they're not directly investing. They are creating different pathways for founders or early stage innovators to get these solutions off the ground.
All right. Thank you very much for that. We are almost basically running close to, closing the panel discussion, but I would still like to squeeze one or two questions in, really, because we obviously had a bit of a delay over the initial sessions. So Phil, you've heard a lot from Mandy in terms of what all the biggies are doing in terms of your competitors like Shell and Total, etc. Can you just give us a bit of a viewpoint in terms of what EDF is doing, which could be compared, let's say, in terms of accelerating the net zero journey around the electrification of transport?
Yeah, absolutely. Yeah, so I mean, it won't be a surprise that EDF also are, you know, undertaking sort of similar activities in this space. And it's interesting actually that, you know, EV.energy is really very much out there. And indeed, Chris, you may recall that they did have a place in IDEALondon that we helped them and housed them for a while and helped them to grow a bit further. And indeed, they were a recent winner of one of our Pulse competitions. The activity that EDF is taking in this kind of place, so we're making direct investments in the EV ecosystem, so larger investments. So you'd have seen sort of more established scale-ups, shall we say. So last year we acquired PodPoint, that was a major investment. On the smaller scale and in kind of the startup world, we have a company as part of our group called EDF Pulse Croissance, which I think is the equivalent of BP Launchpad, you know, and Shell's initiatives, whereby, you know, we act as corporate venture capital companies. We take stakes in companies, help them grow quicker, faster, see where there are any synergies, and help them along in their development. And we believe that that's our, you know, that's a way to not only share knowledge in this emerging market, but also boost the development, you know, because there's a lot that needs to be done, as William said earlier. You know, trying to get to net zero, we need to try and protect the consumer from the complexities of moving to EV, and there is a lot of opportunity for startups to get there much quicker than a large, slower moving corporate such as EDF and others. So we're trying to do our bit to accelerate those through initiatives such as you know, our CVC arm, which is EDF Pulse Croissant. So I think that would be an equivalent to some of the names that Mandy's put forward.
Brilliant. Just talking about, let's say, acceleration, because it also, I'm just remembering, let's say, one input from Will. So if you can come off mute, because I'm going to ask you a question. You said market consolidation is going to happen, let's say, from 21 to 24. And so what players or value chain members, verticals, where do you think the consolidation will happen? Is it more on a vertical or horizontal line? Can you give us a couple of insights from your crystal ball?
Thanks, Chris. I think the consolidation will happen across both horizontals and verticals. As we have discussed, the EV sector is just emerging, and I think we're really in the foothills of the mountain. If you look at uptake rates or for EVs and EV charging, it's all up and to the right. So I think we just at the foothills at the moment. I think with any nascent industry, there's going to be consolidation as the market matures. We've mentioned the oil and gas majors who are making a lot of investments in the space. I think they're likely to play along the verticals. For example, you've got Shell who have purchased New Motion, they've purchased, which is an EV charging company. They've purchased Lime Jump, which is an aggregator. They purchased First Utility, which is a utility. So they're playing along the verticals. I think the utilities are doing something quite similar. Phil mentioned EDF purchasing PodPoint. So yeah, in summary, I think we're going to see consolidation across both as the market matures.
Thank you very much. Last but not least, let me pick up a question from the audience from a good friend, Neil Riddle here. Hi, Chris. I'm interested in asking a question as an early stage startup, Power. Power is raising money now, and we want to know, how do we let investors know about the speed of the market development? And how do the panelists think the UK will keep the speed up for this market? Will government slow it down? Who would like to take that question? Ooh.
I feel like I should, but
Yes, Mandy, save the day.
I'm trying to understand the question, if I'm being honest. So how he'd like to know how to articulate the market.
I think it's more about the speed. So how do you think the UK will keep the speed up for this market? Because there's a lot of things happening very quickly.
I think
Or will the government actually slow it down, you think, because they're slow moving?
I think they don't have a choice with us being so behind on our targets to reaching net zero and being nowhere near globally, you know, getting beneath the 2 degrees Celsius target that we need to get around climate change. So I think they don't have a choice right now. Everything's kind of focused on we need solutions, and some of this very quick policy innovation that we've seen, for example, even the e-scooter 12-month trial that came out last year after people riding e-scooters illegally in London for how long, is an example of, you know, the government trying to respond quickly to the fact that we need to move and mobilize towards this. I think just the argument of, you know, the other day, the 78% commitment that by 2035 that the Prime Minister made, again, around reduction shows, carbon reduction shows that that's the direction that the market is moving towards. They have to do something about transportation in the UK. So, I mean, naturally, these are huge institutions that have very hefty procurement systems that they're struggling to get around, but they're collaborating with lots of organizations like Connected Places Catapults, who are working with many different corporates and the government to try and mobilize this quickly in the right direction. So I don't think actually from an investor's perspective, Emily, jump in if I'm wrong, that there's a need to demonstrate the need of speed. I think it's more a case of, you know, is that startup able to be the one to get the contracts? Because there's a lot of similar models out there. So that would probably be more the argument from my standpoint. I think the market is actually proven we have no choice but to mobilize towards net zero when it comes to transportation.
Thank you. And from Mandy, last words from Emily. There was a bit of a dialogue.
Yeah, no, I think Mandy covered it well. I think you know, strategic investors have been a bit more in the space because it's core for us. And I think what's been difficult is to get financial investors excited. But looking at, you know, financial VCs right now, I think it's very much on their map. And I think that's probably the major difference that's happened in COVID, pre-COVID and now, is that you actually have these financial VCs looking at this too, and it makes it a lot easier to raise seed, not just seed, but later rounds like Series A, Series B, when you have a financial investor involved, to just also mark that stamp of approval. So for me, it's not so much about convincing of the speed of the market, but just of the traction, the problem you're trying to solve, and just being a solid business with a good value proposition.
Brilliant. Thank you very much, Emily. Well, we could have continued for hours probably. What we will do now is probably come to a bit of a close, but I do believe that we've captured, let's say, a lot of the Q&A elements within Zoom, and we can probably actually go back to some of these questions offline. So I would like to actually slowly move to a close. And by the way, I saw a lot of hydrogen related questions, and I have some good news for you, because we have a separate session coming up on hydrogen all to itself very soon. So on that note, Justine, if you can actually move the next slide. There you go. So again, that was a very insightful discussion. I hope you thought so too. And it's time now to slowly come to this close. Thank you to all of the presenters, panelists, supporters, and the audience for your questions, your insights, your inputs. It's greatly appreciated. So before we close, I would like to set a bit of a teaser indeed of what awaits you for the next month with us. As the master of ceremonies of our Acceleration Net Zero series, I have to say as well that I feel very happy to remind the audience as well that on Tuesday, the 20th of April, the UK government have gone a step further by enshrining a new target into law to reduce emissions by 78% by 2035 compared to 1990 levels, accelerating net zero. So the subject for sure is a hot topic, and I would welcome you all to book yourselves into our next event. So please mark the 25th of May in your calendars already, as we shall be hosting a session around that hot topic being hydrogen. How far are we with hydrogen contributions towards the net zero journey? In June, we shall be preparing for a session around storage, batteries, and flexibility. It was being mentioned as well. Batteries is a huge hot topic. So that is to come. Last but not least, we have listened to you in the last polls, and for the remainder of 2021 and leading towards COP26, we shall be revealing you an exciting series of events that will lead us towards a climathon, counting down to November in Glasgow. I shall say only as much. You have to stay with us in terms of finding out more. To the last slide, please, Justine. So Justine shall be forwarding you all a recording of today's session along with a feedback form, where we would love to hear from you what went well and what we should improve on for our sessions going forward. And by the way, Justine, if you can come off mute as well, I think you have a very exciting message as well.
I do. I'll be really quick. Hi, everyone. I'm Justine. I'm the manager at IDEALondon, and we have some exciting news, which is we are reopening our physical hub in Shoreditch on May 17th. And actually, we're going to do an exclusive offer to anyone who's watching now, which is we are going to be offering the last 2 weeks in May for free for you to come and trial out our space, get back into the office. Something that I've been hearing a lot from startups is it's really hard to create those serendipitous moments by the coffee machine and share startup experiences in a virtual world. So please do get in touch. My email's just on the slide there, justine@capitalenterprise.org, but you will have it as well when I email you the recording and the slides. Thank you, Chris.
Thank you, Justine. Another small step towards normality. How exciting. Excellent.
Yeah.
So guys, by having registered for this event, you will be invited to join obviously a number of activities or getting to know what is happening basically from an IDEALondon accelerating point of view on net zero. So there's a LinkedIn group as well. So you will be invited for this as well, where you can have access to topical articles, news, research, and so on, and where you can carry on the conversations with other members. If you're a startup, please check out the support that IDEALondon and the ecosystem, including us at NovAzure, can provide through its input. Especially from IDEALondon, there's a huge range of benefits, including cloud credits and one-to-one support, etc. So have a look at the IDEALondon website. And if you are at the point of scaling your energy or mobility related startup and you need to gain support to accelerate your growth, or you are an investor in the energy and mobility space who needs advice or curated deal flow, then please talk to me at NovAzure. And with that, we're moving to the ultimate last slide in terms of just reminding everyone. The next session indeed will be about hydrogen. So registrations will open up very soon, and stay safe and see you next time. Thank you very much.
Thank you, Chris. Thank you, everyone.
Take care. Bye-bye.
Bye.
Thank you, everyone.
Thanks, Chris.
Thank you.